Toronto was just ranked one of the most overvalued cities in the world by the annual UBS report. Dun, 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 dun. How do we fare on the top ranks? Are we overvalued? Are we in a bubble? I'm going to explore this entire report with you on this week's reaction video. Now, if you're looking for some help on how to navigate this real estate market in this turbulent time, call it weird, changing, and also turbulent, make sure you actually book a call with me using the link right here. It's www.chatwithzen.com, because depending on where you are, your financial situation, what you're trying to do, there's small slivers of opportunity in certain segments of the market, but in most of the segment, we're switching into a seller's market. So if you are trying to deleverage or trying to sell something off, you need to know exactly what's going on, price it correctly so it actually sells, because like I was saying previously, only 1 in 4 properties at the current moment are selling. Yeah, it's not a great market right now.
Simply click on a date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then.
Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a Remax in the greater Toronto area, on top of making awesome educational real estate content just like this one for you. And if you're enjoying the content on your real estate journey, make sure you spread the knowledge by smashing that like button and subscribing to the Prime Properties channel. Now, the first and only article will be not really reviewing, because for whatever reason, usually when UBS has these reports that come out, and it came out, I think, late last week, everybody is all over it. And for whatever reason, and I'm gonna guess it's because we're no longer in a bubble territory, it doesn't make for a good headline, the only publisher that actually commented on this was BlogTO, where Toronto was ranked one of the most overvalued property markets in the world, but not in a bubble. So I'm gonna go over this entire report. So, just ignore the headline there. But here's kind of the full report on what's going on. So I kind of highlighted a couple things here, but to show you, they have this ranking system. I think it's like out of 2 or 2.5 or something. And right now, Toronto's at 1.21. So we're in the overvalued kind of index as opposed to in the bubble risk. The only 2 cities remaining in the world that are in bubble risk right now is Zurich and Tokyo. So do keep in mind, even though we as Canadians or even Torontonians are feeling the high interest rates, there's generally high interest rates kind of across the world right now. So, everyone's kind of feeling it. It's funny, I actually just sent a video to the team talking about how unaffordable Sydney is, and I'll put a video over here and you can watch it in the link description below. But basically, you could just replace the word Sydney with Toronto and everything is exactly the same in the other side of the world, on the lower half of the world. Wow, right? Anyway, so let's look at the bubbles. So right now, Zurich is number 1, Tokyo is number 2, and Toronto is number 7. 7, not even in bubble territory. That's terrible, because the reason why I'm disappointed in us as a city is because Toronto has always ranked top 5 in the last 6 years. Top 5. We are now out of top 5. You see over here, we were 2.24 last year. So around last year at this time when interest rates were kind of hiking, and they were using, I think, data up until Q2, right? So just as they started hiking, and we had that come down. So only Zurich really stayed up there in terms of kind of the call it, bubble-ish kind of market. Toronto becoming number 7 doesn't necessarily mean it's a good time to buy. It also doesn't mean anything, as I'm about to show you in this report, because you can rank it with a whole bunch of numbers, and if you need a home, you need a home. If you need to sell a home, you need to sell a home, right? So the idea of something overvalued, and we talked about this before, just because it's not right for you, or maybe like the whole price to income doesn't match, doesn't mean that prices are necessarily going to come down. Kind of like how when it's a bubble territory, doesn't necessarily mean it's going to burst. It could slowly deflate, kind of like what we saw in the last year, according to this report, right? So again, take this with a grain of salt. It's some entertainment, some value, but don't take it verbatim with a lot of this stuff, right? But I am disappointed Toronto is no longer kind of in the top 3 at the very least, or even top 5. So you can see one of the things I highlighted here, they're saying that, however, higher interest rates have impacted house prices differently depending on existing market imbalances and prevailing mortgage terms, right? So what they mean by that is everyone has felt higher interest rates, but the prevailing mortgage terms are different for every single person, right? So we're not blessed with US 30-year, fixed rate, which is why we're having a renewal crisis potentially coming down the pipeline in 2-3 years. And this is the same thing with certain other cities. And in Frankfurt and Toronto, the cities with the 2 highest risk in last year's edition, right? So they're calling that out. Prices tumbled about 15% in the last 4 quarters. So Yeah, you could probably say that depending on which metric you use, right? So while that is very true, it doesn't necessarily mean that we're out of the woods just yet, because you can see in my previous videos, inventory is building right now, right? Like there's no way to sugarcoat it. And when inventory is this high, very likely prices are going to come down. You do not need to look at interest rates or whatever. Like the short-term thing I always look at is the months of inventory and how quickly inventory is being absorbed. And now it's not being absorbed very quickly, very little buyers, and inventory is building up, which means that there is going to be pressure for prices to come down. Right? It's very simple. You do not need to overcomplicate it anymore. Now, in this little blurb about Canada, which mainly, let's be real, it's just talking about Toronto and Vancouver, right? Sorry, other cities, no shade thrown at you, right? They said that prices more than tripled from the early 2000s up until 2022, right? Which kind of makes sense because we said prices have essentially like doubled every 7-8 years, right? So they say over here that the housing price of sales have dropped 40% in Toronto, which is correct. We're down 40% from the highs. But like I was saying before, like we're probably like 10, 20,000 or like 10-15% less than, call it the 10-year average, when you remove the crazy kind of pandemic markets out of the equation, right? So we're reverting back to a softer, normal market before the pandemic. And again, I've been saying this for the last few videos. If you haven't been licensed prior to that, or you aren't working with a realtor license prior to that, they'll have no idea this is somewhat normal, right? So they are currently ranking, Toronto and Vancouver as just overvalued. It's not in bubble territory, which I guess is a good thing. Right, like in all seriousness, it's probably a good thing, and that the demand for living spaces in these cities are rising rapidly and steadily, and the pressure is shifting to the rental market. So I can say that's absolutely correct, right? Because when people are looking at these high interest rates and prices aren't coming down as quick as they think they should be, they're like, well, you know what, I'm going to wait it out and buy. And which means that the people who have down payments ready to buy with good incomes from like the banks who are already qualifying them with the current income and say can buy right now, but are just waiting, are actually now moving to the rental market, meaning they're now displacing the people who are actually trying to rent because they have better income, more money to offer upfront if they need to get into competition, and they're actually more likely to move in the short term, and which moves out a lot of the more permanent rental people, so that now they're going to be pushing the prices up for the rental market. So this is kind of like an underlying supply issue, but again, no one's buying. But when you have rental prices kind of going up, it's kind of a reflection of supply as well, right? So you can see over here, it says both cities were showing signs of housing market recovery in the spring and increasing number of transaction and positive price growth. While that is correct, remember, I said this last time, we saw that because the fixed rates came down to 4%. They're at 6 now, right? So this data, I think it ends at around Q2. So we saw that, but it doesn't mean that they're out of the woodworks, which is what it says down here. And this is exactly what we see right now. Interest rates got that 2 surprise rate hike. Fixes are now the same as variable, which puts us in a whole different risky territory of should you go fixed or variable right now with an uncertain, volatile kind of market, right? And I'll touch more on that later. But this is all, I would say, fairly spot on, similar to last report. Just the index numbers they use is, call it subjective, right? So the last 2 things I'm going to be covering is kind of what the city benchmarks are relative to the world to give you guys an idea. So this one basically talks about, the number of years a skilled service worker needs to work to be able to afford a 600 square feet flat in the city center. So call it in Toronto, Canadian terms, downtown Toronto, you're basically buying 650 square foot condo, call it a 1+1, maybe a 2-bedroom if it's one of those super efficient investor layouts. And you can basically see Toronto's, pretty low down there, despite, people thinking it's unaffordable compared to the rest of these cities. It only takes 6 years to kind of get there. It's come down significantly from what's before because the prices have come down. But just remember, this is a measurement of price to income. It doesn't factor in kind of like what your borrowing capability is, right? Because that dictates how much money you borrow to buy the asset, because most people get a mortgage to buy a home. And then the other one over here is kind of the price to rent ratio. So you can see over here, Toronto is 22 times the rent to the price ratio, or if you kind of reverse it, it's like a 4.5 cap, give or take, not counting expenses, right? So very, very loosely kind of yield amount. You can see here, it's again, also reasonable. Now, I suspect this number may actually go up because even though prices are coming down slowly and it should shrink that gap, I think rents are actually going to be climbing in the near future if this population thing doesn't stop at any point, right? So I foresee this kind of multiplier getting bigger and bigger. So what does this mean after we've gone through kind of the Toronto specific things of this report? Absolutely nothing, as with all the other ones, right? Whether we're bubble or overvalued, whether one kind of like a report talks about us, it doesn't affect the market, right? So it may change the sentiment a little bit, but I don't think it moves the needle enough. Is Toronto still unaffordable? Yes. Is there a chance it can get better? I mean, maybe it really just depends on what the interest rates are, but are rental rates going to get less expensive? I don't think so. There's this weird phenomenon I'm kind of seeing right now with some of the rental applications coming into our team where it's a lot of the agents are trying to sell the tenant's house and saying they need to find a place so they can get it ready for staging, and they're planning to sell the house. And some of them don't have the money to come up the first and last, and they're saying, hey, we'll give you some money on the sale of the house or an additional deposit, which is telling me one thing. And just keep in mind, this isn't the freehold space, not the condo space. It tells me that there's some primary residents that are a little bit over levered right now, and they're selling, and then now they're moving into the rental space. So are we going to start seeing some primary residents outside of, call it just like condo investors where, they're feeling the interest rate pinches? Yes. But will these homes kind of sell? I don't know, because I don't know where they're coming from and the property hasn't been listed yet. But this is a weird thing where I'm seeing a lot more applicants trying to sell their home and move into a rental. I have not seen this in a very, very, very long time. So this is just an anecdotal boots on the ground thing I'm seeing right now. It's not like it's affecting the entire market, but it's interesting that you can see the dynamics and pressure shift to the rental market right now in a high interest rate environment. Anyways, I hope this was helpful for you to understand what's happening in the market. And again, just disregard the UBS reports. It's good for entertainment, but it doesn't really mean anything, even though I can spin this in a positive light if I really wanted to. And if you really are having some trouble in the real estate market right now and you're not really sure what to do because, again, things are kind of crazy, you could book a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. So yeah. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?